Hey traders from around the world, this is Jeremy Alexander Newsom with Real Life Trading. It's Monday and I hope you're having a fantastic August 17th. Guys, it's already August 17th. Can you believe that? Fantasy football is here. If you guys are a big fantasy football fan, make sure to hop over and send me an email. We are doing fantasy football at Real Life Trading. There's about, I think 10 people signed up already. We have a league of 12. Make sure to send me an email if you want in on fantasy football. There's 2 spots left, and I'd love for you guys to be there with me. It'd be a good time. Let's check out the general market if you want really quick. And I decided to do and just take a really quick look at the DIA, which is the ETF for the Dow Jones. Here's your weekly perspective, and we got a pretty nice size white candle this afternoon. This morning was actually a pretty strong bearish gap. It happened really, really quick. Let's go look at the hourly chart. And it doesn't look as bearish as it did this morning, but we opened and I was looking at it, and here's kind of like a little double top looking thing, and there was a little bit of a support right about there. And that was the support that I didn't think would get broken. That's where my stop was. And the market opened and just free fell for like 7 minutes and then has been rallying the entire day. So, interesting to see what's going on. As of right now, again, strong, nice size white candle. We're bouncing off support. I still am bullish on the market in general. Don't really see any reason not to be. And, this was the day that a lot of people were freaking out, which was right about there. And as of that day, which I posted a video on that day, at saying is your IRA and 401k safe, I think the market's already up 1.5%. So just something to keep in mind. It's interesting how this technical analysis works, and it is, far longer term bullish perspective. Still in there, still interested to see what happens. Here's the SPY, which is the ETF that tracks the S&P 500. And at the moment, we have a lot of spreads going on. We got an August iron condor. So we got a bull put spread down here and a bear call spread up here that expires this Friday. And then the longer term one, the 215, 218, 215 is right here and 201 is right here. So this is pretty far away as well on SPY. And bottom line is on this particular trade, it's an options trade that says, hey, as long as the SPY doesn't go over this red line or go below this pink line, it'll be a profitable trade. It's been trading sideways for a long time. I don't really see anything changing other than being just slightly more bullish than bearish on the market in general, just seeing what it's doing. But, here's the long-term moving averages on the SPY. It's breaking through those long-term moving averages. We were stuck smack dab in the middle for 2 or 3 days, and it finally broke through today. So again, just slightly more bullish than bearish on the market in general, just kind of waiting for some things to shake out and see what happens. Let's go look for a few other companies and see some analysis on them. As always, I do my best to review Apple, every single stock review. And right now in Apple, we got the 122, 123 bear call spread. And that's expiring this Friday, which is good. So 122 is right here, 123 is right here. So bottom line, as long as Apple stays below here, doesn't form a double bottom before Friday, which I don't think it will, we should be just fine. What I'm looking for and looking for Apple to do is probably trade up to the 20 exponential moving average on the daily, which I do anticipate having some bearish sentiment once it hits that. Twitter, we still have our bearish swing trade set up on Twitter. 28.36 bearish entry, 30.03 is the stop. Looking to see what that's going to do. Skechers, I'm actually trying to pick the top on Skechers, to be honest with you guys. It had a really interesting bearish gap on the 12th of August. And if we come in here to the hourly chart, you can see some pretty interesting bearish gap. So it gapped down, it traded up, and it just didn't roll over. Again, unbelievable. Unbelievable. Let me show you guys what the Skechers chart looks like. And this is how I know that the market is in a bubble of some kind. And yes, it will have a retracement, just not yet. But this is how I know. Look at Skechers. This is a daily chart of Skechers. Skechers in 2012 was a $12 stock. It is $150 right now on Skechers. Here's the weekly chart look at this. Look at this. A weekly chart. It is going straight up. So what I'm trying to say is, if you're like, oh man, I think I'm missing out on the opportunity on Skechers, I should buy right here. No, you shouldn't. Don't buy when a stock is like that. All right, that's the time not to buy. In fact, that's the time to really consider yourself lucky if you can sell up there, lock in some profit, and see if it does have a little bit of a retracement or a little bit of a pullback. There's a lot of companies that look like that. Skechers is one of them. AMBA was the other one that I was like, no, don't buy here. And you can see that it did have a little bit of a pullback, and it's kind of experiencing that kind of right about now, that congestion, right? Just the simple fact that it's really, really trading sideways. So again, this is the weekly chart. And I think AMBA on a longer term level just simply does something like this, right? Stocks can correct in time or price. So they can move sideways. So AMBA, if it moves sideways, has a little bit of distribution phase, calms down, and then breaks out, looks a little bit, more bullish than bearish longer term, but it definitely needs a little bit of a correction. Southwest. Now, Southwest, as bearish as I was on Southwest not too terribly long ago, I started having flipped my perspective a little bit as we bounced from the support, traded up to the resistance, had some good earnings, and now Southwest has broken out of this resistance, and our bullish entry was 38.96, our stop 36.74, and our next target on Southwest Airlines is 42.75. Groupon, had a trader ask about Groupon earlier today when I was doing the live broadcast. Groupon, $4.07 is a very, very strong support. Here's a flag pattern. Fundamentally, I think Groupon's a pretty weak company. I don't know if it's going to bounce off this $4.07 price or not. I mean, it's a business model that's pretty easily copied. I'm not sure if it's going to continue or not, but Groupon, it definitely isn't a buy low, sell high area. I'll grant you that for sure. But as of right now, really strong support. If it trades sideways and breaks through this level, I'm a little bit more bearish than bullish. Merchant Monday starts in about an hour and a half at Real Life Trading, the afternoon swing trading floor. I'm going to be doing some reviews of Walmart because it's a merchant stock, has earnings very soon. Super excited to see what Walmart does. I mean, it's building an accumulation pattern down here. So if it continues to trade sideways and break out, that'll be interesting. Zulily got bought out today. Huge news, huge gap. That's really, really interesting to keep in mind. Target has earnings coming up very soon. We're going to talk about that in Merchant Monday. And Pier 1 Imports did trigger our bearish swing trade just the other day on a bracket trade, right? A close below 11.34, stop at 12.18, and that's a break below that strong support. So Merchant Monday, going to be a busy day. I'll see you guys in about 90 minutes. For the rest of you, thanks so much for watching the YouTube videos. Feel free to share this on your Twitter, LinkedIn, Facebook, whatever you use for social media. I appreciate you guys spreading the love of Real Life Trading. Have a great Monday. I'll see you guys Wednesday. And until then, remember, love life, live life, and trade it. See ya.